Diving into the deficit, we've studied hundreds of pages of documents obtained through public records requests in an effort to give you a better look at why Pascagoula is $14 million in the red and consequently has residents facing the possibility of a tax increase.
When you're in a $14 million deficit, which represents half your annual budget, I consider that a crisis.
When City Councilman Stephen Burrow entered office last year, he says he wasn't aware of the city's looming troubles.
It sprang up suddenly in the sense that, when someone goes back and looks at the books independently and they start pulling out monies that were appropriately segregated under bond funds or special account funds, that's when $14 million negative number appears.
In analyzing previous budgets and audits, the end-of-year fund balance, the category used to identify the $14 million deficit in 2017, showed surpluses in every year from 2012 to 15 and as much as $9 million in the black in 2015. But in 2016, the figure dropped to $794,000 in the red. Burrow believes something wasn't adding up in the previous audits before this year's forensic audit.
It's not being identified contemporaneously with their audits for prior years, 14, 15, and 16.
According to the audits from 2012 through 2017, the city's collection of property taxes remained largely flat, ranging in the $7 million range each year, and the city's total revenues dropped from $35 million in 2012 to $24 million in 2017.
If you have higher revenues, you can spend more. And we were maybe not spending 100%, but we were spending a lot of what was budgeted, but we weren't meeting those revenues. Bond proceeds were then separated out of their separate accounts and put into the general fund, as the auditor said, to provide liquidity and basically to cover the bills that were coming in for operational expenses. Unless you were a CPA, you were going to have a pretty good time trying to figure this out, which is, again, why the city had an auditor to try to find these things.
The overspending trend continued into this year. The end of June budget report showed $44 million in expenses compared to $35 million in revenue, a difference of $9 million.
That was before we knew about the deficit. Okay, so once we became aware of the deficit, it became obvious at that point that we were on a course, just like had happened in years past, that we were going to spend more than we had brought in. So we had to make several dramatic changes to our budget.
Those changes and budget-cutting measures included layoffs. Now additional cuts are planned in the 2019 budget, and the city is faced with finding new money.
Nobody wants to raise these taxes.
But raising taxes is on the table. The city's proposal calls for raising the millage rate by 14 mills from 42 to 56, which right now, according to the Department of Revenue, would be the highest millage rate for a city on the coast. Burrow admits it's not a popular idea, but says time is ticking to fix Pascagoula's financial crisis.
The bond proceeds have to be spent by 2021. And so that's when we have to have all the bond money paid out to whatever projects we have, and then all that's going to be left is the general fund, of which we have a $14 million deficit right now.
Now, the district attorney, state auditor, and FBI are all looking into Pascagoula's financial troubles. Right now, we don't know the timetable for those investigations to be concluded.